Hey there, it's Ed Grabowski with Remax Excalibur here in Scottsdale, reaching out to you today. Just wanted to get to you today and talk to you about where my predictions are for 2022 with the residential real estate market in Scottsdale, Phoenix, Cave Creek, and Fountain Hills surrounding area and so forth. So in order to get an idea about where we are headed in 2022, it really would be a good idea to kind of take a look and see where we have been for the current year that we're dealing with. And there are a couple things that I think are important to look at moving forward. The first off, we are on pace to have a historic year in terms of the number of homes that have been sold in the Phoenix Valley. Compared to, I believe it was 2007, we will have more homes sold this year than we did back in 2007. We were at the height of the real estate market of the early 2000s. We are also dealing with the greatest disparity in terms of supply and demand. We have far too few homes to sell. In this market, we currently are dealing with about 1/3 of the amount of homes that we should have under our normal market. And at the same token, we have a greater supply or greater demand for property. We have more buyers in the marketplace than we have ever had. Currently, we have about 25% more buyers looking to purchase in the Phoenix Valley than we would have under a typical market. Interest rates have kind of hovered around the 3% range. At some points, it's been a little bit below, and then as high as 3.25% moving forward. So looking forward to 2021. So as we start to turn the calendar into 2022, it looks like the amount of active listings that we have, the amount of inventory that we have is going to track where we were in January of 2021. So we're going to see, likely moving forward into the coming year, we're going to have some of the same issues with inventory that we had in 2021. That, along with what we're dealing with in the marketplace, and as far as the additional supply, the new construction that we have, we just do not have enough coming down the pipeline that is really going to affect the market that we've had. We're likely going to continue to see significant appreciation across the valley. There's a pretty good chance that it's not going to be along the same lines of what we had in 2021, but it's still going to be pretty significant. Typically, when we hit historic numbers, we do have a little bit of fall off, but there's nothing coming down the pipeline that's going to change things moving forward. My suspicion is that we will see appreciation rates in the 10 to 15% range, which is still very significant, but nowhere in line with what we saw in Phoenix for 2021. When you look back at November's numbers, year over year, we've seen increases of over 26% valley-wide. So my predictions are we'll continue to see aggressive growth into 2022, appreciation rates of 10 to 15%, short of where we were last year, but still very significant growth. We are going to see interest rates probably rise. We already had the Fed who's suggested that he's going to have multiple rate increases in 2022. We're probably going to see interest rates increase over the 3.5 point, may even start to push the 4% range. We are going to continue to see high sales volume. We've already seen economists across the country who have actually said the same, that we're likely going to continue to see significant high sales volume, which is important to note because even though we have limited inventory in the marketplace, we are still continuing to see historic numbers of sales across the valley. In my opinion, which I really is suggesting, is the number that we quantify as far as demand in the marketplace is probably short of what we have. So the chances are we probably have more buyers in the marketplace than we realize that we do have. All right, so I have a lot of buyers that reach out to me, and the question that they ask is, are we going to see these numbers come down? And the question is really what they're asking is what could we have in a marketplace that really could disrupt the trajectory that we're currently on? So the first thing that actually could potentially slow down and bring a stop to the amount of appreciation that we've had in the valley is our affordability levels. We're already at a point that affordability levels for the average buyer being able to purchase the average home in the marketplace is starting to be stretched. So as we begin to push the limits of affordability, that typical buyer, what they can actually purchase begins to diminish. increases in prices, increases in the cost to borrow is really going to cut into what that buyer can actually purchase. The second thing is access to capital. The transitional markets where we find a lot of the buyers that are looking to purchase in the Phoenix area start to have issues within their marketplace. There's a pretty good chance that that's going to have an effect on our market here in Scottsdale, in Phoenix, and so forth. And why that's important is somewhere in the neighborhood of about 35% of all the buyers that are currently looking in our marketplace are not from the Phoenix area. They're actually from out of state. So when we have markets like Los Angeles, Seattle, the Bay Area, Chicago, those are the four major markets that are looking to relocate to the Phoenix area. If those markets have issues with have a slowdown and their ability to be able to sell their home for the vast amounts that they have been able to sell their property for, if those markets become affected, it's likely to have an effect on our market here in the Phoenix area. Second thing is if our stock market tumbles. Look, we are still dealing with a pandemic, and it really does have the ability to send shockwaves through the economy and into the residential real estate market. And we don't really know how this is all going to settle down. Here we are in December of 2021, and the numbers look like they're kind of in line with where they were a year ago. So it's hard to say how that's actually ultimately going to affect the market here in real estate in the Scottsdale, Phoenix area. And then finally, the last thing is the cost to borrow. It becomes more expensive for people to have access to other people's money or mortgage rates. If they go above that 3.5% to 4% in the coming year, that ultimately could have an effect on people's borrowing power and the ability for our values to continue to appreciate at some of the levels that we've had. So the question is people are asking is, are we going to see a slowdown in the market? And all of the indicators suggest that there is no slowdown in our market anytime soon. In fact, buyers that are sitting on the fence today, if they look back a year from now, the average price for a home in Scottsdale, the median price for a home in Scottsdale today is $715,000. If they were to look back a year from now, that same house likely is going to be somewhere in the neighborhood of about $800,000. That, coupled with the fact that interest rates likely to go up, the cost to borrow, the cost to get in that house is going to be a significant increase. It's going to be in excess of 10% more than what that cost would be. So it's a compounding effect, and it's not looking like it's going to get any more affordable in the coming year. And the big reason is the people that are relocating to the Phoenix area are selling their homes for far north of what the value of real estate is in the Scottsdale, Phoenix area. So when they come here and look at buying real estate, the cost is a bargain compared to what their cost is in markets like Los Angeles, Seattle, San Diego, the Bay Area. Chicago is one of the few markets that are in line with what our costs are here across the Phoenix area. But the thing that's significant about the Chicago area is it's one of the very few major metro markets across the country that is actually losing population. Compared to, if you look at the census numbers for 2020 compared to 2010, there is actually a net loss in Illinois in the Chicago area compared to where they were 10 years ago. So the outlook for 2022 is going to be kind of along the lines of what we experienced this year. We're going to continue to see aggressive growth. We're going to continue to see limited supply. We're going to continue to see aggressive demand for buyers in the marketplace. We're probably going to see increases in interest rates, so it's going to be more expensive to borrow. But our values compared to other metro markets is going to continue to be affordable compared to what you find in other metro markets. So that's going to continue to keep pushing as we continue to have job growth and we continue to have population growth in the Phoenix area. That's only going to continue to keep pushing our values here. I hope that information is helpful for you. And if you have any questions, don't hesitate to reach out to me. You can reach me at 480-359-5150. And again, I'm Ed Grabowski. I appreciate your time, and I look forward to chatting with you soon. Take care.